The Walt Disney Company was the unmitigated king of failure theater in 2023. And if you listen to some investors out there, it doesn't seem like they think the future is going to get any better. In what South Carolina Treasurer Curtis Lofton calls a tremendous loss to America, the state is dumping $105 million worth of Disney investments, blaming, quote, structural rot in the company. And the treasurer warns that the sane people at Disney are gone. And it begs the question, is 2024 going to be the year of dumping Disney? Renegade Online. Well, folks, welcome back. Another great day here at Valiant Renegade. It's good to see everybody out there once again. And if you are like one of the many folks watching this video, not yet subscribed to this channel, please take a moment and turn that little red subscribe button to gray. Hit that like button, hit that notification bell, share this sucker out on the social medias, and of course, please do leave a comment before you head out the door today. Make sure to join us every Sunday afternoon at 6 p.m. Eastern right here for the live show. The story of Disney has been far from a fairy tale of late. Tesla CEO Elon Musk recently called for CEO of Disney Bob Iger to be, quote, fired immediately. And now South Carolina is pulling its state funds out of the entertainment conglomerate. According to the South Carolina State Treasurer Curtis Loftus, the decision to divest has to do with the company's management abandoning their fiduciary responsibilities. Let's talk about that phrase, fiduciary responsibilities, for a moment. If you're a publicly traded company, in this case Disney, your job at the end of the day is to return as much profit to the owners or the shareholders of the company as humanly possible. Now, in the case of Disney, we have seen many years of big successes as the largest representative of the entertainment industry, one of the Dow Jones Industrial's 30 components. But in the last several years under Bob Iger's leadership, a lot of questions have started to come up. Is Disney really focused on returning profits to shareholders? Or are they more interested in other things? Things like diversity, equity, and inclusion. Is that taking a precedence over profitability at the House of Mouse? And a lot of folks out there are starting to say yes. Quote, I think it's clear to anybody paying attention that there's a structural rot inside of Disney. It's deep, it's pervasive, and I suspect that Bob Iger, since his return as CEO, now realizes that it cannot be fixed, Curtis Loftus told Fox Business Digital, adding that it, quote, does not bode well for the future of the company. The state treasurer's office included $105 million in Disney's debt securities, which will not be renewed upon maturity. In total, Curtis Loftus is responsible for managing $67 billion in South Carolina public funds. So right off the bat, let's be clear, we're talking about Disney debt, Disney corporate bonds that are sold into the public market, securities that are senior to those of, say, common stock. In the Fox interview, Loftus criticized Disney's embrace of environmental, social, and governance, or ESG criteria, arguing that it deviates from the core principles of investing. Quote, people sometimes forget that ESG has nothing to do with investing, he said. ESG is a speech and behavior code that was created by the left and delivered to everybody else under these virtuous circumstances, or presumed circumstances. The most significant issue, according to Loftus, however, lies not in the policies themselves, but in the individuals at the helm of the company. I think that's an important statement because there's a number of large publicly traded companies out there that are part of the S&P 500 or the Dow Jones or even the NASDAQ 100 that talk about ESG and DEI fairly regularly, but many of them use it as a shield against certain folks out there in the public ether. Yeah. Look, we get all the DEI and ESG stuff. We love it. But at the end of the day, these companies are still going to put profitability first and everything else, including those, second. But not so at the case of Disney, at least according to Curtis Loftus. And of course, I don't think he's alone out there either. We talk about this on YouTube all the time. Anytime that you put something above profitability, especially as a publicly traded company, you're flat out missing the mark. And this is exactly what Disney seems to have been doing for the last several years. And we're going to show you exactly how it's caused the performance of Disney to suffer unequivocally. The sane, sober, and talented, mature people are gone. And now you have the gender studies crowd running Disney, he explained. That's why their movies are flops, and their market cap, I think, is about half what it used to be. It's a tremendous loss to America. We all grew up on Disney. Now, to be fair, MoneyWise brings up an additional point. That being said, the situation isn't entirely negative. In the fiscal quarter ended September 30th, Disney generated $21.2 billion of revenue, representing a 5% increase year over year. Adjusted EPS came in at 82 cents, a significant improvement from the 30 cents per share reported for the 1 year ago period. But what does that really mean if you've been a long-term Disney stockholder? Well, let's take a look at some reality, shall we? Let's just look at 2023 year to date, which is effectively the entire calendar year. If you look at that orange line, well, that's Disney. And if you look at the purple, the blue, and the pink respectively, well, that's the Dow Jones, the S&P 500, and the NASDAQ. I want you to take a look and see if you had Disney stock at the beginning of the year, where would you be now compared to just the broad indexes? Well, you'd be up 4.65% over the entire year as a Disney stockholder. If you had just bought the Dow Jones Industrial Index, 13.81%. If you'd bought the S&P, 24.78%. And if you'd bought the NASDAQ, 44.61% return for the year. And again, the Walt Disney Company is one of 30 stocks that make up the Dow Jones. And the Dow Jones was up over 13% for the year, with Disney being up around 4.5%. That's a big problem. It's one of the things dragging the Dow down over the course of this past year, at least arguably. But it gets even worse. Let's look at a 5-year trend going back to late 2018 or the beginning of 2019. If you'd had Disney stock 5 years ago and sat on it till today, you'd be down 15%. In other words, let's pretend that $100 million in South Carolina was actually Disney stock and not Disney debt. That means that $100 million would be worth about 85 today. In the case of the Dow Jones, the S&P, and the NASDAQ, look at the numbers. The Dow up 63% in the same time frame. 92.7% for the S&P 500 in the same time frame, and 129.8% for the NASDAQ during that same 5-year period that Disney lost 15%. You got to ask yourself as a Disney investor, what has happened in the last several years? What have you really gotten for all of the time value of money or the economic opportunity costs for sitting on Disney, a company that was once doing great, but in recent years has just fallen apart? And a lot of it has to do with exactly what Curtis Loftus, the state treasurer of South Carolina, talks about in his article. Again, the sane, sober, and talented, mature people are gone, and now you have the gender studies crowd running Disney. That's why their movies are flops, and their market cap, I think, is about half what it used to be. It's a tremendous loss to America. We all grew up on Disney. Bob Iger spent a lot of stockholder money acquiring a great many IPs over his tenure as CEO. Think of things like Pixar, like Marvel, Star Wars, and Lucasfilm, for example. And then, of course, the $70+ billion Fox debacle, which, by the way, they're now about to peel off yet another piece that was acquired from that purchase, and that is Hotstar from India. That's going to go out the door and be majority owned by Reliance. We'll talk about that more in the live show this weekend. But just those few things right there represent nearly $100 billion in acquisitions by Bob Iger in the Walt Disney Company in the last 15 years or so. And you have to look at what's going on in the movie theaters and wonder, well, what happened to Pixar? What happened to Walt Disney Animation, for that matter? What happened to Star Wars, which never even seemed to get off the ground? And what in the world has happened to Marvel, which was once the belle of the ball when it came to theatrical releases, and now has completely tanked in phases 4 and 5? And is there anything better coming in 2024 and beyond? The Walt Disney Company is one giant hot mess right now. And if anybody can give me any reason why they think that 2024 is going to be any better than 2023, I'm all ears. But I just don't see it. Regardless of the excuses, their theatrical slate for the coming year is basically nothing. Disney Plus is still going to struggle heavily between now and September 30th, just 9 months from now, roughly, to actually achieve the profitability goals that the Walt Disney Company set forth a few years ago. And we still have yet to get a final figure on what the Hulu acquisition is going to cost the Walt Disney Company, getting the final third of the pie over from Comcast. Disney's already stroked a check for $8.5 billion, but that's not going to be all. There's probably going to be billions more in addition to that to satisfy the deal. And Disney is going to have to get that done very quickly if they have any hope of getting to that profitability metric by the end of the fourth fiscal quarter of 2024, which is September 30th. Disney Plus, as it stands right now, is woefully behind Netflix when it comes to viewership consumption. Even the most average run-of-the-mill shows on Netflix are routinely trouncing things on Disney Plus, especially headline Marvel and Star Wars content on Disney Plus week after week in the Nielsen ratings, with very rare exception. And when you factor in what the Walt Disney Company spends for each of these major Disney Plus productions, it really gets bad. Throughout all of 2023, we've been covering all of the problems, all of the warning signs at the Walt Disney Company, things that just were not working right. And yes, there's still a lot of folks out there on Wall Street that have a very rosy picture of Disney's future. And quite honestly, they may turn out to be right. But as of right now, I'm just not so sure about it. There's a lot of hope and prayer seemingly baked into these analysts' estimates of where Disney is going to go down the road, but I need to see some actual proof in the pudding. And just like Curtis Loftus in South Carolina, I don't think that the current leadership of the Walt Disney Company is capable of turning this around in any meaningful fashion. And it's not just Bob Iger. It's everybody down the line that Disney has put in place, effectively through its DEI and ESG initiatives. To be clear, though, diversity and profitability are not at all mutually exclusive, but it's all about how you do it. Are you gaining diversity organically through trying to hire the best people for the job, or are you simply trying to fill a quota? See, the latter is something that always seems to impact profitability, not to mention the fact that, well, let's face it, it's unconstitutional. And in the case of Disney, well, you could just listen to what we've been talking about for years with the talent drain at the Walt Disney Company. The very best and brightest people that Disney had, the creatives that drove the engine of not only television but film production for years of Disney successes, well, they're pretty much all gone. And we got a lot of confirmation on that recently, thanks to our friends over at Film Threat, Chris Gore and Alan Ng. A company like Disney simply cannot survive on mediocrity. But that's exactly the environment that they've built and fostered for the last several years. And we're seeing the results of it now. Do we really think that Bob Iger is going to fire all of these people that are, frankly, dragging Disney down right now because he's the guy that built the system to put them in place in the beginning? Disney has got to go get the most talented, creative people possible, regardless of what they look like or what gender they are or who they sleep with. But hiring people to do those jobs on those criteria alone is what put Disney in the mess they're in currently. And the South Carolina State Treasurer is dead on the money. I'm just not sure anything is going to get much better for Disney in 2024. And I wonder how many other folks, how many other investors out there in this coming year are going to dump Disney. Make sure you're subscribed to Valiant Renegade and join us every Sunday at 6 p.m. Eastern for the live show.